Hello, fellow traders. Tis I, the Rumpled One, coming to you Monday, February the 24th. The year's 2025. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ for Walmal. And a friendly reminder, risk management. Always have your risk management in place so you don't lose more than you're willing to lose on any one single trade. And in fact, I had a question. A trader was asking about risk management. Um, I believe it's pretty simple. Um, you decide before you enter a trade how much you're willing to lose on the trade. Some people might say, how many dollars they're willing to lose on the trade. Some other traders might go, I'm willing to lose this percent of my account, 1%, 5%, 10%, 50%. The 50% is kind of crazy. And so when you're, setting up your trade, just decide how much you're willing to risk on that trade. So let's take a look at the weekly chart, and we can see from the dashboard there's a couple of pairs that have not filled the gap, the euro dollar and the Australian US dollar, and dollar, let's see, no, dollar Canadian did fill. If we zoom out to the monthly, we are 347 pips above that monthly open, 53, 54 pips off the high, 388 off the low. And for the week, we are 4.6 pips above that weekly open, 54 off the high and 11 off the low. That tells me we're in the rat zone. For the daily, we're putting in the opening range, and we've only got about, 65 pips of range there for the day. So that I think maybe it's going to push a little bit further, but we'll wait and see. For the year, 128 pips above the yearly open and 53 off the 54 off the high and 388 off the low. Oh, I'm sorry, 538 off the low. I was looking at the monthly there. We have some inside bar action here on the pound. We are in the monthly inside bar from 13 weeks ago. We're above the weekly inside bar from 9 weeks ago and slightly above by 11 pips the daily inside bar from 4 days ago. On the range, we've got 5 pairs over 100 pips in range. Pound once again clocking in at 65. Looks like we've just bounced off that daily weekly open at 26.32. And looks like prices has not closed below that open, at least not on the M30 chart. So we are in the green rat zone, and we're below the smart rat, which is at 126.40, which is what I like to call the launch pad. Bambino Flex indicator says to go short. Pivot trading plan says to short near R1, short near the pivot, which both of those trades would have paid off. So we've taken out the daily pivot. Okay, we missed the weekly pivot by 1 pip down at 126.243. And the monthly, we've taken that out. Wick zone, in and out of the upper wick zone, both sides of it. We've come down to the lower wick zone, and we've moved above it again. Walmal, my gut feeling says we're going to break and make a new daily low. What about you? Hey, you're coming in, your volume's really low. Oh, that's
What I can
me.
do
There
about
you
that?
go. Yeah, okay. There we go.
Yeah, I would kind of agree with you. The reason why is if you look at the daily candle, you can just see that it put a really, really big wick up on the top, and it's now sitting very, very close to the open. And we're like 3, 4 pips above the open right now. It looks like it's going to point down. The H4 that just opened this hour, put in a nice little wick, like a 5, 6 pip wick at the top, and it likes to, once it puts a wick on one side, it likes to run the other direction. Now it did run, about 12, 15 pips. So, a little caution there. But if it goes and breaks that the daily open, it's off to the races at that point.
Right.
That's my guess, and it's all it is a guess.
Yeah. Oh, another trader wanted to ask us about using pending orders versus using market orders on entry.
I use both depending on what I'm trying to do or what's going on. So, what do I mean by that? It's not like the stock market. You talked a little bit about that last week on one of the videos. The difference between a true limit order and a pending order and a market order. But where do I use it differently? If the market's moving very, very quickly, I like to use a pending order sitting out there, just for the purpose that I know that I'm going to go and miss the trade, and I don't want to go and miss the trade, and so I'll use it for that. Or if I know that I'm going to, okay, I got a clear setup. Like, for instance, if you remember the Walmal trades I used to take a lot of, I used to do a lot of pending trades back then. The reason why was because I could set it up ahead of time. You could see it. Okay, here's where the trades are going to be. It's going to happen. For instance, on this particular hour, if we go and look at it, the Walmart trade would have happened either at 44.7, or it would have happened at 37.3, whichever side you chose to go and take. And you can see that pretty close to the close of the previous hour. And you get to put the two trades out there, and whichever one takes, that's fine.
You might have confused people. We thought the Walmart trades were at the double O's and and every 10 pips.
I'm sorry, I'm thinking the breakout trade, the straddle breakout trade that I used to do. Sorry. Yeah, the Walmart trades would happen at every 10 pips.
So you would have had a short at 40 and a long at 50.
Exactly right. And then by doing that, it's just nice and easy. And what I did was I went out and purchased an EA from somebody. I don't even know if he still sells it or not. But what I could do is what we would call an OCO, one cancel the other. And the idea was if the trade put me into a long, I have it automatically take the trade and at the same time cancel the short. But it did it but then it was placing it as market order as opposed to being a pending order. Although I never used the feature, but the EA would you could also set it up to put them out there, put the trades out there as pending orders, and then what it would do is if the pending order got hit, then it would cancel the other pending order. So it would do that as well. And the advantage, though, of that was if I didn't do it with pending orders with it, is that it would take into account, was my spread too big, was there going to be a problem with, that price was just had moved too far away from the quote unquote agreed upon price, and so it would cancel the order and wouldn't allow you to take the order. So that was the advantage of using an EA to do it. But market orders, I just do all the time. If I'm sitting here looking and I'm saying, hey, look at this right now. We just got a flip-flop box, and I don't have time to put a pending order out there. And you know what? I want to go short here at I don't know 34.5 or something like that, I'd sit here and I'd just go and pop it, but I would like to go and do it with some type of EA that allowed me to go and do it and not have to worry about the spread getting out of control.
Yeah. And another question had to do with risk. I guess they wanted us to explain risk a little bit more. I've already explained it, so maybe you can add your 2 pips in.
Sure. I like to look at risk differently than the rest of the world looks at risk and call me crazy. Uh, but to me, playing risk with, a lot of people do it by looking at tips and so on and so forth. The problem with that is it's like playing with phony money, and I like to look at risk in terms of dollars. How much am I willing to lose? And I've said this a bunch of times on videos in the past. How much are you willing to go and literally take a lighter to it and light it up in the street and watch it burn and not be upset about it? Okay, that's what I consider to be risk, and then I usually push it a little bit past that. Oh wait, we just broke that open
Right.
the day and the week. But in any case, I like to go in and push it, okay, and just a little bit. But I just want to go and say, let's say I'm willing to lose $100 on a trade. That's it, And I don't care how I get to the $100. I just don't want to lose more than $100 on a trade. So what that means is, if I'm in one trade and I'm down, $75, I'm in one trade, I'm down $75. If I'm in a trade where I'm in, 3 trades, 4 trades, and I'm down $75, I'm down $75, period. End of conversation. The minute I hit $101, I'm out of there. That's how I look at risk, because I'm just willing to lose X dollars, on a particular trade. What I've since done is and this is I probably shouldn't say this because it is a little bit more dangerous to go and trade this way. It does add a little bit more risk to your portfolio. But what I'll do is, if I'm up for the day, let's say I'm up $30, then I'm willing to lose up to $130. Okay, that's just how I look at it. I'm willing to lose up to $130. So it gives me a lot more room to go. And sometimes you just get into a trade too early. It's sort of like, I've been saying this, this market's going to go down, but go down to somewhere around 25. I just have a gut feel that's where it's going to go. Don't know why, but I just do. Well, I do know why, because when I look at the charts, I just see clear sailing till that level. Well, if I had gotten in, at the top of this hour, let's say I got in at the open of the hour, I would have had the thing run against me 5-6 pips. If I was just looking at it purely from the point of view of just pips, that would not have been good. But because I already had made my, the money I needed to make for the day. I already had a bunch of money sitting there. I could ride that out and now watch it go all the way down to 30, and it just gives me more room to go get it, because we never get into the trade exactly right. It's the type of thing where you get into the trade, and we were talking about this earlier, Tira, where you asked me the question, when you get into a trade, how often does it seem to go and drop against you 2 or 3 pips right away? And I think I said 50 or 60% of the time, something like that. Yeah, and it just seems to happen all the time. But then if you just sit there, all of a sudden, guess what? It does go in the direction, because the patterns that we see, they do work, but sometimes we just get in a little bit too early, unfortunately.
Yeah, and you know
there's
what?
nothing.
Speaking about too
Right,
early, we're just about out of time. So, fellow traders, um, keep those questions coming, but it's better if you post them out on the video rather than emailing them, because that way, if we answer them out on the video, then everybody can see the Q&A and benefit from it. So always remember and never forget, it's not what you trade, It's how you trade it. So go out there and drain the banks. Rumpled one over.